Today, Bitcoin tests the $97,000 level. Treasury Secretary Scott Bessent testifies before Congress and doubles down on the Trump administration's embrace of crypto. And Miller of Hiro Systems breaks down his own testimony before lawmakers, calling for crypto legislation. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are in the green this morning, with Bitcoin rising more than 2.5%. By noon Eastern, the cryptocurrency traded just under that $97,000 level. Ether rose 2.7% to $18.17, while Solana rose 1.8% to $145. Okay, let's talk about the top stories. Treasury Secretary Scott Bessent testified before the House Financial Services Committee, where he reiterated the Trump administration's embrace of crypto.
We believe that the United States should be the premier destination for digital assets, and as members of this committee and the Senate are attempting to do, create good market structure around that, so that U.S. best practices are used around the world, that digital assets are an important source of innovation that will drive that can drive usage of the U.S. dollar around the world, as with stablecoin legislation. There is speculation that there may be up to $2 trillion of demand over the next few years for U.S. government securities from digital assets.
Secretary Bessent was also pressed on whether progress had been made to strike trade deals with nations around the world, something that has caused uncertainty in both traditional markets and in crypto, but he refused to answer, saying that it would be detrimental as negotiations might still be in progress. Next, shares of Freight Technologies, a logistics firm trading on the NASDAQ, are trying to stabilize after the firm announced that it's adding President Trump's meme tokens to its treasury. The penny stock rocketed by as much as 240% after last Wednesday's announcement that the firm intends to raise $20 million to buy official Trump meme coins. It then gave back about 60% of those gains by yesterday afternoon. As for why the company is making the purchase, Freight Technologies CEO Javier Selges said in the announcement that the acquisition of Trump tokens could be a, quote, effective way to advocate for fair, balanced, and free trade between Mexico and the U.S. A reminder that the largest holders of the Trump token are invited to a dinner this month, which the president is set to attend. Now, at the same time, President Trump has imposed tariffs on a portion of goods moving from Mexico into the United States as he hopes to negotiate new trade deals with the country. Democrats have raised concerns over the president's ties to crypto, including a letter from the ranking member of the Senate Subcommittee on Investigations, Richard Blumenthal. That senator wrote letters to both the issuer of the Trump meme coin and Trump-linked crypto venture World Liberty Financial, warning of a preliminary inquiry into potential violations of government ethics requirements. The White House has told CNBC Crypto World that President Trump's assets are in a trust managed by his children and that there are no conflicts of interest. Finally, Ethereum's latest upgrade, Pectra, is now live on the network. The Ethereum organization announced the upgrade's launch at about 6 a.m. Eastern Time, and with it brought scalability features for Layer 2s, new smart wallet features, and it increased the number of ETH validators that can be staked on the platform. Now, the price of ETH has struggled in recent months with the lack of a strong catalyst and increased competition for Ethereum by other networks. All right, for our main story, let's talk more about all this crypto testimony happening on Capitol Hill. Our own Tanea McKeel spoke to Miller, CEO of Hiro Systems, about his testimony before Congress, where he pushed for new crypto regulation.
Alex, thank you so much for being with me on Crypto World today. You went to Congress with a list of major points you wanted them to consider: regulatory frameworks, guidelines for the SEC, registration requirements, disclosure rules. Talk to me about why those rules were important for you to bring to this hearing.
So I work in an ecosystem called Stacks, the company I work for that I run Hiro. We did the first and only successful Reg A offering for tokens about 6 years ago. We spent more, we did that thing they said, right? Come in and register. We did that and we spent more on compliance than we raised in the offering, more than $15 million. So it's clear that, trying to apply securities law to a token context just simply doesn't work. It's not viable. And that's the reason that we're not seeing anyone do it. And we're seeing all of these upstarts and things go offshore and set up in other jurisdictions where they have gotten token specific market structures. And so we saw on Monday the release of the discussion draft version of basically the updated market structure bill in the House. You'll remember last session we had FIT 21 that came out that got very good bipartisan support, had more than 70 Democrats who voted for it, in addition to almost all of the Republicans. And this new updated draft they have is honestly, it's even better. There's a number of, I think, substantial improvements. There's obviously some work we want to do with them on it, but it very much clarifies that digital assets are commodities, not securities, that they're under the purview of the CFTC. But at the same time, for early stage startups who are trying to build a new chain, it says, hey, if you want to pre-sale some of these, right, doing ICO type offerings and things, we're going to create an exemption under that is supervised by the SEC, that does have disclosures, that provides confidence to investors. But, my hope is that if we get this right, it moves you from having to spend, $5 million to try and do a registered offering here to spending, $50,000 or $100,000 to do an exempted offering, the same way that you see it, working under Regulation D when folks are raising from private investors for normal tech startups.
So on Hiro being the first to qualify for a Reg A offering of tokens, walk me through that process and get into a little bit more on the specifics of what you'd like to see done differently in this regulatory regime you're talking to Congress about.
So this was back in 2018, and we had a very big belief from the beginning of we wanted to do things right. If you want to build a project that's going to be around for a very long time, and we're building a Bitcoin layer 2, it's about bringing programmability to Bitcoin, you want to know that it's going to be there in 20, 30, 40 years. And that means you want to be compliant with laws. And we wanted to open it up to everyone to participate instead of it being restricted to accredited investors or international investors. And so that's why we did it. Because no one had done it before, we had to go, obviously, sit down with the SEC and work through it. And I think there's a couple things. One, as wonderful as many of the people at the SEC are, they're just not set up to work with small early stage companies, right? They normally are dealing with much bigger, larger ones. You're working with very expensive $1,000 an hour plus attorneys for this. And so while the normal qualified offering would maybe take you a couple months to work through with the SEC and have 2 or 3 rounds of comments, this took a year and had 10 or 15 rounds of comments back and forth. It cost $3 million to get to the Reg A for an offering that raised about $15 million. So, and that was before the annual compliance cost, or that when we went to try and deregister, because the network had decentralized, the SEC Enforcement Division launched a kind of baseless investigation that they spent, again, 3 years and millions of dollars more on, only to find absolutely nothing. And I think it's because they didn't want the precedent to be set that someone could deregister in that way and could move from having made an exempt offering and or made a qualified offering into now being a decentralized one. And that's another really important thing that this bill does, is it codifies that. It says this is exactly how these things work. We are creating an explicit framework where you can do an offering that does have some securities protections around it. But once it becomes what's called a mature blockchain system under the law, it is just a commodity, and it's overseen by the CFTC, who obviously has a lot of experience and authority in how commodities markets work.
Where do you see U.S. crypto regulation right now? Stablecoins felt like the most likely legislation to pass, but now we're seeing some uncertainty around that. What you advocated for in your testimony has been seen as sort of the next step after stablecoins, but do you feel optimistic about those, and what are you looking out for?
Yeah, I think we're going to ultimately see movement on both of these things. I think when you look at the folks across Congress, even between last Congress and this one, there's a lot better acceptance of this is happening. Number one, this is an inevitable technological change. And 2, that we're losing a huge amount of competitiveness to other countries on this, that if we don't actually get good, clear structures, it's going to happen anyways, but it's going to happen in other countries. And like I said, I think that's why you see there is good support from Democrats. It's obviously more widely supported by Republicans, but there are plenty of good Democrats who are supporting it. I had, I think, some really great exchanges with a number of them yesterday during the hearing that we had. And there's a lot of details to still work out. We saw that with, I think some of the concerns that some of the Democrats on the Senate side had with the stablecoin bill. But I think ultimately folks recognize that these are very serious, very well-written, thoughtful pieces of legislation that are necessary, that we're talking about like these fundamental new financial and technological primitives, and we're going to get something done on it.
There was a separate hearing on Capitol Hill yesterday. I want to get your take on this one, focused on potential conflicts of interest with President Trump and other government officials using crypto. Is that something that should also be a legislative priority?
I think the real focus right now on the legislation is around providing the structure of how crypto and both the technology and the financial aspects of it are going to get, clear regulations around them. And the good thing is that when you have a good, clear market structure and good, clear regulations, it allows folks who are trying to build good and long-term projects to thrive. And it makes it obviously harder for any bad actors to participate in it too. So I think that's where all of the serious attention really is. And like I said, we had both a lot of Republicans and a lot of Democrats who were in the main hearing on the market structure legislation who are really focused on exactly that.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.